Hello students, welcome to paper 2 corporate and other laws exam oriented batch. So here you can see the material on the screen. So this is a complete material for paper 2 corporate and other laws, approximately some 230 to 240 pages you can observe. So in this material you can see all the keywords were highlighted in the red color, headings were highlighted in the green color. Our batch will be around 60 hours. So total in paper 2 we are having two branches. One is corporate laws, other one is obviously other laws. So the weightage of corporate laws is 70 marks, weightage of other laws 30 marks. In corporate laws we are having two concepts. One is Companies Act, not entire Companies Act. In Companies Act we are having 11 chapters, and the second concept is LLP. In other laws we are having three concepts: General Clauses Act, Interpretation of Statutes, FEMA. Last three attempts, even when I gone through MTP papers, MTPs as well as question papers, around 14 marks are coming from FEMA. Minimum 14 marks are coming from FEMA. And from General Clauses, Interpretation of Statutes, minimum we are getting 8 marks. Minimum 8 marks we are getting. Now from LLP also we are getting minimum 12 marks. It's very easy to tell these points. You know, entire question paper is for how many marks? 100, including choice it is for 119 marks. Yes or no? LLP weightage is 10%. That means 119 into 10% means 12 marks. Understood? And you know, Companies Act 11 chapters will give you weightage of 60 marks. Now in this Companies Act I will tell you the chapter names. First one is preliminary. This chapter will not come, you know, the question will not come from this chapter directly. A question comes with these adjustments, like, you know, preliminary plus accounts of companies. A question will come from preliminary plus accounts of companies. For example, OPC, cash flow statement. Combining these two elements, a question will come for 4 to 5 marks. The definition of OPC you will find in preliminary chapter. Cash flow statement you will find in accounts of companies. Another one, for example, small company. You know, in one attempt there is a question. A small company filed financial statements with ROC. ROC raised an objection that financial statements doesn't include cash flow statement. Now the point is, this is connected with preliminary chapter regarding definition of small company. Why? They will not ask you exactly a small company. They will not tell you this is a small company. They will give figures. Preceding financial year turnover, paid up share capital, they will give figures, and they will ask you whether it is a small company or not. For that preliminary chapter knowledge you should have. And of course cash flow statement is the definition in the financial statements. It is also part of preliminary only, but we give very much importance in which chapter? Accounts of companies. So preliminary chapter, a direct question will not come. It is connected with another chapter. Next one, incorporation. From this you can expect 5 to 7 marks. Next one, prospectus. From this you can expect 6 to 8 marks. And next chapter is share capital and debentures. Lengthy chapter. And the expected weightage is minimum 6. But because of these MCQs, you know what is happening, you know, in MCQs, if they ask 4 MCQs from this chapter, 4 into 2, 8, that means this chapter weightage will go to 14 marks. Not only this chapter, all chapters, just because of MCQs, the normal weightage 6 marks is going to 14 marks, or it is going to 12 marks because of MCQs only. Everyone getting my point? You know, the from FEMA you are getting 14 marks means the reason is you are getting 6 marks MCQs and you are getting 8 marks, 2 4 marks descriptive questions. That's why the weightage is very high. Next chapter, what is our next chapter? Share capital over. What is our next chapter? Come on, tell me. Deposits. From deposits you can expect minimum 5 marks. And similarly here also, if some three objective questions if they ask, the weightage will go to 11 marks. Next one, charges. So from charges also you can expect 6 marks. And next lengthy chapter, what is the chapter name? Management and administration. Here also the minimum weightage is 6 marks, but it can go up to 16 marks. And next one, very small chapter, that is dividends. Minimum weightage 6 marks. 9th chapter, accounts of company. minimum weightage 6 marks, maximum weightage 10 marks. 10th chapter, audit and auditors. Here also the expected weightage is 6 marks to 8 marks. That's it. And foreign company, definitely one question will come from foreign company. One question compulsory, 5 marks. Sometimes 2 marks MCQ will also come. Understood? So this is the weightage of these chapters. And there is no compulsion that, this will follow. I mean, I say follows this. Sometimes what happens, from charges they may ask 0, and that weightage they may shift to deposits or to the management and administration. Exceptional cases this will happen. And I suggest you one more thing. The thing is, suppose if you take share capital, in share capital we are having total how many sections? 30 sections. But if you take deposits, hardly 5, 73, 4, 5, 6, 6, 76, 5. Dividends 5. Charges 11. Next, preliminary, some 2 sections are there. Now these 4 chapters, total number of sections, if you observe, 2 plus 5, 7, 7 plus 11, 18, 18 plus 5, 23. Whereas share capital, how many sections? 30. From 4 chapters, even if you get 4 marks, each chapter 4 marks you expect. 4 into 14, 16 marks. Suppose in share capital, if you are getting only one question, the weightage is 6 marks. Okay, including MCQs, the weightage is 14 marks. Now what generally people think, this is getting, here we are getting a high weightage. So we will read it completely, ignoring other things. But what my suggestion, instead of beating a big chapter, if you beat small chapters, it will give you more confidence. Because that one question coming from share capital, if it is a tricky question, we may get either 0 or we may get half marks. But small chapters will definitely won't give you, you won't get any tricky questions at all. Only some practical questions. You need to analyze the situation. That's it. Are you all getting my point, students? Everyone. And similarly, management and administration. So section 88 to section 122. This is the lengthiest chapter in the entire Companies Act. The time required for preparation of this chapter is equal to FEMA plus LLP. So from this chapter, if you expect, if you are expecting 16 marks, from FEMA and LLP, you will get 22 marks. 14 plus 12, sorry, 26 marks you get from these 2 chapters. So instead of preparing management and administration, if you prepare those 2 chapters completely, thoroughly, with 2 to 3 revisions, 24 marks is in your hands. Whereas from management and administration, sometimes you may get 6 marks also. And why, management and administration you get more questions? There is an internal choice. Have you observed? I think in question 6, last question, there is an internal choice for 5 marks. Unfortunately, those 2 questions comes from management and administration only. So that's why the weightage of the chapter in the examination is 10 marks. Are you getting my point? First, for every work, planning is very important. In planning, if you don't consider these kind of inputs, so definitely in implementation you find difficulty. Okay, fine. Now I'll start with chapter preliminary. In this chapter, we discuss generally, about applicability of Companies Act and few definitions. So simply section 1 and not complete section 2, but in section 2, material definitions. What is a private company? What is a public company? What is a small company? All those topics I'll discuss with you. Understood? So coming to preliminary chapter, first one is scope and applicability. So Companies Act 2013 consolidates and amends laws relating to companies to align with changes in economic environment and promote economic growth. See, Companies Act 2013 is not a new act. Sorry, it's a new act. It's not a first act. It's not at a first act. It is a replacement of earlier act. What is that earlier act? Companies Act 1956. That means previously we had Companies Act. First of all, tell me, first of all, why we need act? Why we need act? First of all, why we need company? I'll answer these basic questions. For survival, everyone need basic necessaries, right? Food, clothing, shelter, basic medical facilities. For these facilities, definitely we should have money. And money you can earn in 2 ways. One is not legally. I'm talking about only legally. Our subject is law. Understood? So one way of earning this money is joining employment. Other way of earning this money is by from business. Now for carrying business operations, the options available to everyone is two options. One is individual persons setting up a business, doing the business. We call it as sole proprietor. And the other option is association. Like-minded people. Suppose I am thinking about one business. You are also thinking about the same business. Now we both sit together, we think about the business and we will start the business. Understood? And in this association also, we are having wide varieties. For example, partnership. For example, LLP. Another example, company. Now if you go with sole proprietorship, many disadvantages, many advantages are there. Advantages, sole decision making authority. Whatever I fix, left means left only, right means right only, correct means correct, incorrect means incorrect. Biggest advantage, authority. Biggest disadvantage, capital scarcity. I can invest whatever I had, that's it. And another biggest disadvantage is unlimited liability. Tomorrow if that business doesn't went good, huge losses, in that case not only my business assets but also my personal assets are liable to the business debts. Now coming to partnership, here another disadvantage is there. Advantage, capital is more, because if one is contributing, if everyone is contributing 1 lakh, like the 10 persons are there, 10 into 1 lakh means 10 lakhs. Capital is okay, good. But the biggest disadvantage in partnership is joint and several liability. What is joint and several liability? I am liable for my acts, I am also liable for my partner acts, because every partner is an agent to other partners. Another drawback. Now the best alternative is company. Now company is an artificial person. Yes or no? It is having a separate legal entity concept. Separate legal entity concept means what? It can acquire property in its own name. It can incur liabilities in its own name. It can be sued. It can sue. Now the point is, if it is getting independent contractual capacity and if it is taking money from the creditors, it is taking advances from the debtors, and if it is not performing the operations, imagine. If it is not paying money to the creditors, or if it is not giving goods to the debtors. Now what about the legal consequences? How these people can sue company? Indian Constitution 100% not applicable to the company, because Indian Constitution is applicable to citizens of India, we the people. Yes or no? So company is a separate legal body. It should be regulated in a different manner. We can't apply 100% Indian Constitution to the company. For example, tell me, as a citizen of India, you can vote, yes or no? Can company vote? That means for each and every article is not applicable to company, article is applicable to company. Instead of doing that, let's bring a separate act to regulate the things. The main motto of law, if you take the main motto of law is to regulate the things. And you take, laws are of two types. One is revenue law, other one is admin law. Sir, we never heard these names, sir. See, these are not the names there in the act. These are the names I used to summarize the laws. From some laws, government get money. From some laws, government get power to control. Can you tell me example for revenue laws? Exactly, GST. Every month 1.5 lakh crore government is getting from GST. It's not 1.5 crore, it's not 1.5 lakh, it's 1.5 lakh crore. That means throughout the year, just calculate, throughout the year, 18 lakh crores budget is coming from GST. You may wonder, how that much amount, how? You're paying fees, GST included. You're going to restaurant, you're eating food, GST included. No, 2 years back I bought a car, Hyundai Creta. 28% GST I paid to the government. Everyone. Similarly, income tax. Now coming to admin laws, can you give me examples? Obviously, company law is an admin law. From company law, government government will not expect crores of rupees. Government expects only administration, LLP Act, Indian Contract Act, General Clauses Act, interpretation, everything comes under admin laws. So what we are reading, revenue laws or admin laws? You are reading both the laws, but I am teaching you only administration laws, that too only for company law. So right now this is very clear. Why? What is the main reason of company law? To regulate companies. To regulate companies. In companies, you will find three people very popularly. Who are those three people? Board of directors, investors, and the third one is definitely public. In investors, you can see, creditors, members. Creditors, again, you can see trade creditors, non-trade creditors. For example, bankers, money financiers comes under non-trade creditors. Those who supply goods and services on credit basis, you will find under trade creditors. Members, they will make investment and they will wait for returns. Understood? And from public, you can see employees joining that organization. And you can see debtors, you can see creditors. So these many people are connected with company. If company is doing wrong, and if you strictly implement separate legal entity concept, what happens? Act of company is liable, members are not liable, directors are not liable. Then what happens? It will borrow money from banks, it will take advances from debtors, and it will stop repaying that amounts. It will stop providing goods to the debtors. Sir, punish the company, sir. Punishment of company means, punishment of certificate of incorporation. No. So we should punish the real persons who are doing the things behind the company. So this is a popularly called lifting of corporate will. So all these things are happening because we are having a law. So the ultimate objective of our company law is to regulate the things. And if you rethink, law always talks about inferior people. It won't give importance to superior people, dominant people. It always talks about inferior people, weaker section parties simply. Not reservation, I am not talking about reservations. I am just telling about company don't do these things. Company don't do these things. Why? If you do these things, these people will get affected. Understood? So majority, even if you take Indian Contract Act, even if you take a Sale of Goods Act, there you will see breach of contract only very top priority topic. Yes or no? Similarly, in our chapter also, you can see lot of obligations, lot of duties on the company, on the board of directors. Then only everything will happen as per the system. Best example for law, just one small example. Traffic laws. Imagine if traffic law is not there. Imagine what happens if traffic law is not there. Traffic jam. And those who drive vehicles with super fast, they will met with an accident. Accident means loss of a life of a person, and it also damages public properties, roads, something, buildings might get damaged. Now to protect human lives and to protect public properties, we introduced a law called traffic law. So ultimate objective of law is to control something, to regulate something. And this is, we are getting these concepts of law not from India's independence, not from Britishers. Everywhere these laws are there, everywhere. Even if you go to BC, even if you go to kingdoms concepts also, there also you will find law. But in kingdom concepts, law is 100% law is with king only. He is the lawmaker. He will frame laws. And he is the judge. Suppose if someone is not listening to it, he will punish the people. But coming to our country, in democracy, people are the rulers. So that's why you can see three wings in our constitution. 3 wings are there in our country. What are those 3 wings? Legislative, lawmaker; executive, government; judiciary, courts. Understood? And tell me, who writes law? Obviously common persons like me, like you. Simply experienced person will write a law. Based on their past experiences, they will write law to regulate future. But if you observe carefully, future is unpredictable. In future, definitely some changes will come. According to the changes, we need to update our law. That's why you will observe amendments in our law. And in the implementation phase, any practical differences, practical difficulties, all those difficulties, who will address? Judiciary, nothing but courts. That's why we had case laws in the company law. Everyone. So legislative, you can see act. Executive, you can see rules. Judiciary, you can see case laws. Okay, fine. So we started our journey with earning money. For earning money, either you should be an employee or a business person. As a as a business entity, how many options are available to me? Either sole proprietorship, association of persons, that means partnership, company. Now our focus is on company. First one, Companies Act consolidates and amends the laws relating to the companies to align with the changes in the economic environment. See, Companies Act 1956 is popular at that time. Right now, due to change in advancement in operations, globalization, liberalization, privatization, that act became outdated. Instead of amending multiple times, let's throw that act, bring new act, and this new act consolidates and amends all the previous company laws. And it received consent of President on 29th August and it was published in the official gazette on 30th August 2013. Enforcement dates, not that much important. You can see section 1, it came into force with effect from 30th August 2013 and 98 sections came with effect from 12th September. Some 143 sections came with effect from 1st April 2014. That means our Companies Act was not implemented on day one itself. It was implemented in the phased manner. Speed okay, voice okay, language okay, fine. Structure, rule based legislation. Section will be very short, but rules, if you observe, lengthy. That means every time, for every change coming to parliament, conducting parliament sessions is time taking thing. So some administration part, parliament delegated that power to the government, and many think parliament, government both are one and the same, but it is wrong. It is not correct. Parliament means people representatives. Tell me, in democracy, who are the rulers? People. And our population, if you observe, it is 140 plus, yes or no, 140 crores plus. Is it possible for 140 plus to gather at one place to take decisions collectively? Impossible. So that's why we are sending our representatives to parliament. In Lok Sabha, you will find our representatives. So they are framing laws, means they are doing the things on behalf of us, everyone. Now, for any amendment in the act, it requires parliament approval. That means concerned ministry has to read out that amendment and remaining people should give their consent. It's not a one-day task. It will take more days. Right now, you can see our finance bill, Finance Act Finance Bill 2025. It is keep on, the house keep on gets adjourned. So it's not a easy task. That's why for small amendments, small explanations, unnecessarily coming to parliament, time waste. That's why what Companies Act, what parliament did in case of Companies Act, majority powers with respect to framing the rules, that power was assigned to government. In government, you will find the rulers, the people who serve to the public. Simply, you can see majority number of members will form a government. So in parliament you will find people representatives, whereas in government you will find ruling party. Now you got the difference, right? Parliament means people representatives, whether opposition or ruling are immaterial, all are equal in parliament. But coming to the government, ruling party you will find. Okay, so who frames law? Who frames act? Who frames act? Parliament. And who will frame rules? Government, that is executive body. 470 sections divided into 29 chapters, 7 schedules, each chapter accompanied by at least one set of rules. Purpose. What is the purpose of our Companies Act? Improve corporate governance, simplify regulations, strengthen investor protection, ensure corporate regulations remain contemporary. Just asking, suppose if ICA increase 40% qualification mark to 60%, 50% aggregate to 75%. Now tell me whether students will come on, will not come. Students will come or will not come? Definitely that many number of students will not come. Only few students will come. Similarly, if government increase new rules, if government introduce new rules, if government increase the number of rules, do you think business people will come forward? No. From government point of view, just tell me, from government point of view, sole proprietorship better, company better? You just tell me. Why company? Because government is having close monitoring on the company. As a sole proprietor, see, today I am teaching classes to you. Do you think government know about my thing? No. But if I incorporate a company, if my company is getting revenue from, for example, from A&M classes or from Shrestha classes, definitely what I will do at the end of the year, I prepare a financial statements, I will file with the ROC. That means monitoring, updation of my activities is possible only when I am doing business under sole proprietorship or under company. Under company. So definitely government want more number of companies. For that, Rules, increase of rules required, simplification of rules required, simplification. That's it. Next one, definition and applicability of Companies Act. Company means company incorporated under Companies Act 2013 or any previous company law. When first time when I read this definition, I got a lot of laughs only. I laughed at the definition. Why? What is the definition? Just read the definition one more time. Company means company incorporated under Companies Act 2013 or any previous law. What is the logic in the definition? Why the definition was framed like that? For 5 minutes I thought, and later I realized the definition is very simple. Company is equal to new company plus old company. Sir, what is this new company? What is this old company? Companies which are getting incorporated under Companies Act 2013, all are new companies. Suppose if this definition is not there, imagine Infosys incorporated in 1981 under 1956 Companies Act, they get it out. Sir, I registered under Companies Act 1956. Should I follow old acta? Should I follow new acta? Wipro incorporated in 1946 under 1913 Companies Act. It will get it out whether new act applicable to me or not. ITC, oldest company, they get it out whether new act is applicable or not. To answer these questions, lawmaker framed definition like this. Company means not only a new company but also old companies. Now you understand the logic? Fine. Now tell me, every association of person, every association is a company, true or false? Every association is a company, true or false? False. Why? Only an incorporated association is a company, and that incorporation should happen under Companies Act 2013. Is it clear? Or any previous company law. Next one, short title. Act is called Companies Act 2013. Extent. What is the extent? The act applies to whole of India. That means any company getting incorporated in India, Companies Act 2013 will apply. Application. The provisions of this act apply to companies incorporated under this act. This act means Companies Act 2013 or any previous company law. Companies Act 1956, 1913, 1880s, 1866, 1882, like that. We had 4 previous company laws, right? And I forgot to tell you, for the first time the word company was used in the year 1600. East India Company came to India for trading purposes, right? Britishers entered India in that way only, right? That means company word is prevailing. Always remember this point. Practice first, law next. See, today we are practicing this because law is there. No. We are practicing. Good practices are codified in law. Bad practices also codified in the law under punishments. First practice, next only law. Understood? Okay, fine. So companies incorporated under this act or previous company law. Next, insurance, banking, electricity. I call them as big companies, ma. Whenever I want to use the word insurance, banking, electricity, I use the word big. Big means what? B means banking. I means insurance. E means, G means generation of electricity. So our Companies Act is also applicable to big companies. Exception, if there is any inconsistency between Companies Act and Banking Regulation Act, if there is any inconsistency between Companies Act and Insurance Act, if there is any inconsistency between Companies Act and Electricity Act, follow respective acts. For example, being a company, Schedule 3 is applicable. What is applicable form for financial statements? Schedule 3. But for banking companies, different format. Electricity companies, different format. Insurance, different format. Now there is a conflict. In that case, which one I should follow? Being an insurance company, I will follow IRDA. Being a banking company, I will follow. You can observe SBI. It's a listed company. It's a company. It's a listed company. And it's a banking company. So they follow banking norms. They follow SEBI norms. They will also follow company norms. So simply, if Banking Regulation Act is not providing solution to any problem, come to Companies Act. Sir, both acts providing solutions, sir, but Banking Regulation Act is a specific solution, sir. Now for banks, which act you should apply? Banking Regulation Act. Understood? Everyone? Next one, any company governed by special act. Example, you can see Food Corporation of India and NHAI, National Highways Authority of India, unless inconsistent with the acts. So simply, if you read all these points, in all these points, one thing is common, that is body corporate. First of all, tell me, body corporate company, same or different? Same or different? How it is different? Now everyone will tell a point. Sir, every company is a body corporate, sir. Every body corporate is not a company, sir. Yes? Yes or no? Even if I ask you in detail, sir, body corporate has to satisfy some 4 characteristics, sir. Company has to satisfy some 10 characteristics, sir. But listen carefully, every company is a body corporate because body corporate is an incorporated association. What is a body corporate? It is an incorporated association. If such incorporation happens under LLP Act, then it is LLP. Under Companies Act, then it is a company. Under LIC Act, it is LIC. Under Banking Act, it is a, getting my point? That means all LLPs, companies, all statutory companies, all are body corporates. All these associations are body corporates. You know, for LIC, there is an act called Life Insurance Corporation Act. Understood? So all body corporates, all companies are body corporates, but all body corporates need not be company. Now if you observe carefully, out of these 6 points, there is no concept called sole proprietor, there is no concept called partnership. It is talking about only incorporated associations. Everyone, for company 100% applicable, whereas for remaining body corporates, it is applicable only if there is no inconsistency. Understood? Everyone? Next, for inconsistency, keynote point you can see, except insofar as means provisions of Companies Act exclude inconsistent provisions of relevant acts. So for insurance, there is a separate set of financial statements, and our Companies Act is not dealing with those financial statements. And provisions also, for insurance companies, you know, provisions is the headache concept. Why? Generally, why we keep provisions? To cover unforeseen losses. For insurance company, everything is unforeseen loss only. Suppose Mr. X is taking a bike insurance for 1 year. Suppose X is a good driver. He drives good. No accident. That means 100% premium is profit. Suppose X is a rash driver. Today he will meet with an accident. Or at least tomorrow, or at least after 1 month, or at least after 6 months, definitely he will meet with an accident. At that time, insurance company has to pay compensation. That means the premium paid, okay, that is a remuneration, that is a profit, but expenditure is contingency. Everything is contingency. So for provisions, Insurance Act will follow the respective acts, not Companies Act. Are you all getting my point? And for banking companies, biggest challenge is NPA. What is NPA? Non-performing assets. You know, in our Companies Act, there is no concept for NPA, but for Banking Regulation Act, concept of NPA is there. So these kind of, concepts, Companies Act is not dealing. Next one, body corporate. Just now I told you, body corporate includes company incorporated outside India, but does not include 2 things. Sir, you told body corporate means incorporated association. No, sir. That is a meaning. What is the definition? It includes company incorporated outside India, but does not include cooperative society. It does not include any other body corporate which CG may by notification specify in this behalf. This point is giving power to CG. CG is having power to prescribe few body corporates which are not as a body corporate. For example, RBI is a body corporate. We are having RBI Act. Tomorrow, if Government of India is making announcement stating that RBI will no more a body corporate, that means cooperative society is not a body corporate, RBI is also not a body corporate, like that. So for the time being, only one entity is not a body corporate. Which is that entity? Cooperative society. Tomorrow they may be added or not added, but power is lying with whom? Central government. Once again, central government means it's not Narendra Modi sir. Narendra Modi sir is a prime minister, that's it. Central government means cabinet of ministers. Understood? Parliament is different, government is different. In parliament you will find people representatives, government you will find ruling party. Sometimes, you know, when I go in depth in a concept, I get a lot of fun. For example, we can't do things collectively, that's why we are sending our representatives. Simply they are our agents. All these people can't meet regularly, that's why all these people will nominate another agent, and that agent is prime minister, chief minister. Simply agent's agent. Yes or no? Of course, prime minister, obviously, you know, we give respect. But if you go in detail into the concept, it's like agent's agent only. Even if you take director's concept, for example, members, it is not possible for them to carry day-to-day activities. That's why directors. Again, in directors also, they can't meet regularly. That's why substantial powers are given to whom? Managing director. Already directors are agents to the company. Managing director is agent to agent. But we give a lot of respect to MD. Oh, MD sir is coming. MD. But who is MD in reality? Agent's agent. Okay, fine. Next one, classes of companies based on the members. So we are having how many companies on the basis of members? Classification, come on, tell me how many companies we are having? 2 companies. It's not 3, 2. Private, public. In private company, if number of member is 1, then it is a OPC. Now tell me, every OPC is a private company, yes or no? Yes. OPC can never be a public company. OPC can become public company only if number of members is increased to 7. Okay, fine. Now tell me, what is a 1-person company? It means a company that has only 1 person in its, 1 person as its member. Minimum 1, maximum 1. In detail, I will discuss with you about OPC in incorporation chapter. Who can be a member, who is a nominee, what are the benefits available to OPC, everything I will discuss with you in next chapter. Next concept is public company. What is a public company? Any company which is not a private company. So all these are companies. In this, if any company is not a private company, then it becomes public company. So public company definition is very simple. Public company definition, 2 parts. Part 1, not a private company. Part 2, a private company which is a subsidiary to public company is deemed to be a public company. If time is not good, on this point also you will get a 3 marks practical question. Like how, suppose practical, in practical, in some sections, you can see private companies are exempted. But if that private company is subsidiary to public company, it is deemed to be a, for that public, for such a private company, exemptions available or not available? Not available. Getting it? That means on this point also, if time is not good, you can expect 3 marks practical question. So 100% pay attention in the classroom. Whatever I am discussing with you, initially it may be like, some live incidents you will get it, but slowly you will get only question paper incidents you will get. Question paper incidents only I will tell you. Whatever examples I am using, that means, whatever examples I am using in the class, that means all those examples are previous attempt questions. You remember that point. So whenever I am telling example, you just answer that example as if you are writing examination. Okay, fine. So in public company, how many components we are having? 2 components. One is not a private company, other one is a private company which is subsidiary to public company. Second part, just wait, first I will discuss with you private company. So what is a private company? It is a company which is having a minimum, private company is one that has minimum paid up share capital as may be prescribed. So far not yet prescribed. So prescribed means, prescribed means parliament is giving power to central government. Central government, if you want, you fix the limit. So far limit is not yet fixed. Minimum paid up share capital as may be prescribed. Second one is by its AOA. AOA means Articles of Association. Articles of Association shall contain 3 points. I'm not telling only 3 points. In entire articles, these 3 points are compulsory. What are these 3 points? Restricts right to transfer shares. As you know, share comes under goods definition. It's a mobile property. Shares are transferable. I can sell this Mac to you. I can sell this Mac laptop to you. I can sell shares to you. But by transfer, what happens? By transfer, what happens? Old members will exit. New members will come. What is our company name? Private. We want privacy. Privacy means confidentiality. Confidentiality is possible only when existing members continue. Yes or no? That's why members can't transfer shares to outsiders. And this is not a prohibition. Don't think that there is a prohibition on transfer of shares. It's not prohibition. We are restricting. We are controlling the transfers. In what way we control the transfers, sir? Very simple. Member, you want to transfer shares? Yes, sir. Okay. First, we will give offer to existing members, not public. We will give offer to existing members. If existing members are ready to take shares, sell the shares to existing members. Or else, we will select the candidates, to that party only you sell them. And we will fix the price. Don't worry. We won't fix low price. We won't make you loss. We will fix the price, and the price will be certified by company auditor. Who is company auditor? Independent person. So if he is recommending that price, that means it is genuine price only. So we fix the price and we will select the candidates. Only to those candidates you sell the shares. Now tell me, transfer of shares prohibited or restricted? restricted, not prohibited, restricted, just to protect confidentiality. Next, limits number of members to 200. When I read Companies Act 1956, the number is 50, but right now number increased to 200. I don't know how an association with 200 persons is a private company. Even if you start including your family relatives from mother side, father side, I don't think 200 number will come. But okay, lawmaker fixed 200. Why 200? I don't tell you. I can't tell you first of all. But why they fix a limit? The reason is we should separate private from public. We should separate private company from public company. For that they fixed a limit. Up to 200 members, you can enjoy the privileges of private company. I mean, if you can register as a private company, you can enjoy the privileges available to the private company. So maximum number of members restricted to 200. But here, while counting 200, two people are excluded. Who are those two people? Present employees, past employees. On this point, we are having two practical questions. In one attempt, one question came for 5 marks. Only on this note point. Only on this note point. Are you all getting my point? See, employees, why they become members of the company, the reason is because of ESOP, because of employee stock option plan, members, employees will become members of the company. For example, my company is a startup company, ma. As a startup company, do you think I will have plenty of funds or limited funds? Limited funds. I need talented employees. But my competitors, they are agreeing to pay some 20 lakhs per annum package. Right now I can pay only 10 lakhs. So definitely a skilled person will join my company, my competitor company, because he is getting a more pay. So what I will do, I will tell to the employee, right now I will give you 10 lakhs salary and I will also give you shares worth 10 lakhs. So in future, once our production starts, once providing services get started, so these shares value will go up. At that time you can sell the shares, you can get the money. So simply to overcome the situation of limited funds, what companies are doing? They are offering benefits to the employees in the form of employee stock option plans. Now by giving this offer, option, again if you are counting employees as a number of members, if you count them for the purpose of 200, what happens? In a company, for example, my company DVS Private Limited company is there. In this company already 4 members are there and there are 200 employees working in my company. If I give employee stock option to all these 200 employees and if all these employees are included in the count, total count will come to 204. But restriction is there up to 200. So I should not include employees. That means employees are counted as 0. There is a concept of perpetual succession to the company. Perpetual succession means what? Continued existence. Continued existence is possible to the company, not to the individual. After attaining age of 58 years or 60 years, one should retire. That means that employee will become former employee, ex-employee, retired employee. Now if you start including them for the purpose of 200, again count 200 will, getting my point, 200 condition will breach. So that's why present employees, past employees, former employees, nothing but past employees who became members during employment are not considered. And there is no concept of future employees. Future you join my employment. That's why today only I am giving share to you. Possible? Not possible. So those who became members either after employment or before employment are counted. During employment, not counted. Clear? So while counting 200 employees, included or excluded? Excluded. This benefit is available not only to the present employees but also to the former employees. And next one, joint holders of the shares are treated as a single member. Joint holders means co-owners simply. To this property, to this land and building, suppose 2 owners are there. This is a joint property. Similarly, if a one share certificate, forget about number of shares in the share certificate, in this building, forget about the floors. Suppose 4-floor building, it is registered in the name of A and B. Now this is a joint property of A and B. It's not like 2 floors to A, 2 floors to B. If they register like that, no problem. But joint property, A and B are owners. That means for property 2 or more owners are there. Similarly, in a share certificate, ignore number of shares. Just if the share certificate is held in the name of A, B, C, they are considered as joint shareholders. And for the purpose of count 200, all joint shareholders are counted as a single. That means single member. That means what? A, B, C, even though they are 3 in number, we will count them as 1. Everyone getting my point? Fine. Next one, last point, prohibits any invitation to the public to subscribe for its securities. What is your company? Private company. Private company, do business with your funds, don't go to public. So that's why last one, and this is a prohibition. But you know, if you go in practical, the reason why company was divided into public and private, there is a good logic. The logic is, you people, suppose you are 10 in number, you want to start a consultancy business, consultancy company. After listening to the advantages of the company, you decided to form a company. You came to me to incorporate a company. Now I'm telling you, 470 sections you have to comply. In addition to this, you have to comply rules. Every year you need to file some 2 forms with ROC. Every year you have to file these many forms to the ROC. Like that, if I start explaining about this act, will you form a company or will you go and do business under partnership? Under partnership type only you will do business. But as a partnership, you may have advantages like flexibility in the organization, but government will not have any control over partnership. Why? Partnership registration, mandatory or optional? Come on, answer. Optional or mandatory? That means close monitoring on partnership, possible or not possible? Not possible. What I want you to incorporate company, but you are feeling bored with, you are feeling a burden with 470 sections. That's why what I am doing, I will exempt few sections to you. For example, if you take third chapter, what is our third chapter? Prospectus. If you can't make public offer, first of all, prospectus is not at all applicable to you. Some 20 sections exemptions are there to you. Are you getting my point? And you are expecting some relaxations. You don't want complete burden, you want relaxation. If you want those relaxation, how can I give you the advantage of public fund? Are you getting my logic? Everyone. So, compared with public company, the compliance cost in private company is very, very less. And compared to private company, the compliance cost in small company is very less. Compared to this both, OPC compliance cost is very less. But if you observe carefully, in OPC, second member funds also not possible. Only one member can contribute funds. Understood? Coming to small company, it can't do turnover exceeding 40 crores. Why? If it do turnover exceeding 40 crores, no more a small company. And compared to private company, public company is having a lot of compliance burden. So this classification was based on compliance. But what we studied as based on the members. Now tell me, which one is a apt interpretation? Compliance point of view, apt interpretation, or members point of view, apt interpretation? Compliance point of view. Are you all getting my points? Everyone? Okay. Now tell me, just answer my question. How can you identify a company whether it is a private company or a public company? If name ends with private limited, it's a private company. Acha? Government companies are not required to use word private in its name clause. Section 8 companies are not required to use word private limited at all. Then how will you classify whether a company is a private or public? Our answer is on the screen itself. On the screen itself, answer is there. Exactly. If you take AOA, in AOA, if these 3 points are there, it's a private. If these 3 points are not there, it's a public. Now, if a public company wants to convert into private company, by adding these points, it can convert itself into private. If private company wants to convert itself into public, by deleting these points, it can become a public. Getting my point? Everyone? Now tell me, public company point of view, private company point of view, which is more compliance burden is there, where less compliance burden is there? Private company, less compliance. Public company, more compliance. Now, public companies, what they do, because of lot of restrictions on them, they incorporate a subsidiary private company. That means this private company will get funding from which company? This public company. And with that funding, they will try to do a number of things. As a public company, it can't do the things. With the help of private company, they want to do the things. To stop this kind of malpractices, unlawful practices, Government of India, lawmaker, what lawmaker told? Private, even though by way of your articles of association you are a private, majority of control is left with whom? Public. That's why you are no more a private company, you are deemed to be public company. Sir, I am deemed to be public company now, sir. Can I offer securities to the public? No. Why? Because your AOE is containing these points. That means Deemed public company is such a company, it will have only disadvantages of private and public. It will not have advantages of private, advantages of public. Getting my point? So that means the concept, the second point is just to stop unlawful practices. Everyone. Suppose if a private company is having a subsidiary which is a public. Are you getting my question? What is my question? Private company is holding company. Public company is a subsidiary. Now can you call this public as a deemed private company? No. That kind of points are not there. Can I call this private company as a public company? That kind of logic also not there. This is a private, this is a public. Understood? Everyone? Can I proceed? So from this concept, you may get a question only based on count of 200. So while counting 200, who are excluded? 2 people are excluded. Past to present employees. And who are considered as a single member? Joint shareholders. Next one, small company. See how we decide a company whether it is a small or big. Suppose if you take a natural person like me or like you, based on the height, small person, based on the size, small person. But for companies, shape, appearance, not there. Yes or no? Yes or no? First answer me whether company is an illusionary concept or real concept. Real. Why? Certificate is there. Under operation of law, we are getting a certificate of incorporation. So that is a real concept. But someone asks you, where is a company? Every one of us answer, company is there. But the right answer is company is on paper. Company is on piece of paper. If I ask you Infosys company, you are telling Bangalore. Suppose, with the help of one missile, imagine. I won't do, just imagine. With the help of one missile, if I blast that company building, do you think company died? Company is alive only. So how company life comes to an end? Through official liquidation. Liquidation is nothing but killing a company legally. Everyone? Okay. So company will not have any size, shape. That's why on what basis we classify company as a small company? The basis is financial parameters. In that we consider only 2 parameters. One is turnover, other one is paid up share capital. If paid up share capital is up to 4 crores and if turnover is up to 40 crores, then that company is a small company. Understood? Now answer my question. There is a company called Jan'26 Limited. Their paid up share capital is 20 lakhs and their turnover is 2 crores. Now whether Jan'26 Limited is a small company or not a small company? Small company or not a small company? How many of you tell small company? Or at least tell me how many of you tell not a small company? Why not a small company? Exactly. Everyone focus on the numbers. But in addition to these 2 conditions, there is one more condition. Any company other than public company. Getting my point? So in examination, question will come like this only. Jan'26 Limited, paid up share capital 20 lakhs, turnover 2 crores. So just looking at these numbers, if we write yes it is a small company, then again the answer is wrong. Are you all getting my point? Suppose Jan'26 private limited company. Okay, this question came in the exam. The paid up share capital of the company is 10 lakhs. The turnover is 60 lakhs. Is it a small company or not a small company? Small company. Suppose 6 lakhs out of 10 lakhs held by J Limited. Now the question is whether Jan'26 Private Limited is a small company or not a small company? Not a small company. Why? It is a deemed public company. Why? It is a subsidiary to J Limited. 60% of the capital is with a holding company. Are you all getting my point? In this way a question comes. Next one, exclusions. All these are very, very important. These 5 companies are not small companies, even though they satisfy parameters, financial parameters. What are those 5 companies? 1 holding company, 2 subsidiary company, 3 section 8 company, 4 statutory companies, 5 public companies. Statutory company means company which was registered under a special act. Understood? Section 8 company means charitable companies. Holding company, subsidiary company, you know. So 5 companies are not small companies. What are those companies? Public, holding, subsidiary, section 8, statutory. Understood? So if they want to test a small company, they can test in two ways. One way on financial statements of small company. The other way, exclusions. That means, items which are companies which are excluded from small company. Can I proceed? Everyone? On the basis of control, companies are classified into three types. How many types? Three types. Associate, holding, subsidiary. Generally, on the basis of control, we had two companies. One is controlling company. Repeat, controlling company. And the other one is controlled company. One which can control, we call it as controlling. One is getting controlled, we call it as controlled company. Generally this control comes in two ways. One is, if company board of directors are listening to me, I will have control over day-to-day affairs. If membership controls, if membership rights, if I am having membership rights, that means simply ownership rights, I will get control over not day-to-day operations, but I will get control over company activities. So start this business or stop this business, like that. Now here everyone should understand, everyone knows what is a holding, what is a subsidiary. What comes in your mind when I tell you holding subsidiary? Majority of the capital. That means more than half of the capital. You get this point. But my point is, suppose Reliance Industries Limited is there. In this Reliance Industries Limited, 60% paid up share capital was held by Mukesh Dhirubhai Ambani. Mukesh Dhirubhai Ambani is holding 60% paid up share capital in Reliance Industries Limited. Now, can I call Reliance as a subsidiary to Mukesh Dhirubhai Ambani? No. Why? Mukesh is not a company. Mukesh sir is an individual. So if you look at the holding company definition, holding company, it's a company in relation to one or more other companies, means a company of which such companies are subsidiary companies. That means here we are having two companies, A Limited, B Limited. A Limited is called holding company when B Limited is its subsidiary. Very simple. Who is the father? One who has children. Yes or no? Now what is a holding company? One which is having a subsidiary company, it is a holding company. So here company includes body corporate but not individual. So any individual, any cooperative society holding 60% of capital of the company, then that company will not become a subsidiary. And the holding person is not treated as holding company. So in holding company, the status is given only to the either company or body corporate. Can I proceed? Everyone. Suppose LLP is holding 60% of paid up share capital in Reliance Industries Limited. Now this Reliance is a subsidiary to this LLP because LLP is a body corporate. Can I proceed? Subsidiary company. A company is a subsidiary of holding if the holding company exercises control either of the following two ways. One is over board of directors. Other one is over voting power. Here you can take a family as an example. In a family, tell me, actually from society point of view, who is controlling family? Father. But if you go in detail, in depth, who is controlling family? Obviously mother. Perfect tense, husband is the controller of the family. But who actually controls it? Wife. Understood? Now here also, either voting power, by way of voting power, I can control that company. Or by way of board of directors composition, I can control the company. For the first time when Honda company decided to come to India to start a two-wheeler manufacturer business in India, automobiles, Honda went to Hero company and they made a joint venture, that is Hero Honda Limited, for example. According to this joint venture, Hero Honda Limited company, majority of the directors will be appointed or removed by Honda company. Why? Because if they take some kind of small mistakes in the decisions, if they make any mistake in the decision, it will not only affect Indian market, it will affect their global market, because in India something happened like that, because Indian population is very high. If in India any operational decision gets failed, it will affect the rest of the India. That's why Honda company, they made a clear condition that majority of the directors we will appoint, we will remove. That means who is having control over the composition of the directors? Honda company is having control over Hero Honda Limited. In that way, Hero Honda Limited is a subsidiary to Honda, which is a company incorporated outside India. Are you all getting my point? Next one, it is very easy. More than 50% of voting power. Voting power comes from equity share capital. If I hold 60% of paid up equity share capital, that means how much control I am having? 60% control I am having. If I am holding 10% equity share capital, that means how much control I am having? 10% control I am having. So here, how much control is required? More than half of the total voting power. Are you all with me? Everyone. Now this voting power they can exercise in multiple ways. One is either own basis or together with one or more subsidiaries. Suppose there is a company called H Limited. In S Limited, if they are holding 56% of paid up share capital, this is a concept called direct subsidiary. S Limited is a direct subsidiary to H Limited. Understood? Suppose H Limited is there, it is having 60% control in S Limited. And S Limited is having a 33% control in A Limited. In the same A Limited, H Limited is having a 20% control. Now suppose if A Limited calls for a general meeting, suppose A Limited calls for a general meeting, who attends a general meeting? Members. In those members, one member is H, other member is S. Yes or no? H Limited definitely it decided to cast vote in favor. And it can also influence S to cast vote in favor. Why? Because subsidiary is already under the control of H Limited. Now both together, H Limited is having how much voting power in A Limited? 20. S Limited is having how much voting power in A Limited? 33. That means 53% voting power will be exercised according to the discretion of H Limited. This is direct plus indirect. And third one is totally indirect. How? For example, H Limited is having 60% control in S Limited. S Limited is having a 59% control in A Limited. Now if you observe carefully, H Limited is not holding a single share in A Limited, but still H Limited can control A Limited. How? H will influence S, S will influence A. This is the concept of indirect subsidiary. Everyone? Everyone. So either it is own or together with one or more subsidiaries. Next one, deemed subsidiary. A company controlled indirectly through another subsidiary is considered as a subsidiary. For example, A Limited is a subsidiary to S Limited, S Limited is a subsidiary to H Limited. Indirectly, A Limited is also subsidiary to H Limited. So from H point of view, A is a deemed subsidiary. Understood? Next one, holding companies cannot have layers of subsidiaries beyond a prescribed limit. For example, this is layer 1. And this is, for example, A Limited is holding some 60% control in B Limited. And this is known as second layer. Beyond this, not permitted. You can have horizontal subsidiaries. Like, for example, company A Limited is there. It can have n number of subsidiaries. Down the line, they can also have one more line. But down the line, not allowed. Are you getting my point? That means vertical, max 2 layers. Horizontal, there is no restriction at all. You can have 500 subsidiaries. You can have 1000 subsidiaries. Understood? Control the composition of board of directors. If a company can appoint, remove majority of all directors of another company at its discretion, it controls the board of directors. Shares held as a trustee or in a fiduciary capacity do not make a company a subsidiary. Interesting point. Fiduciary capacity means what? Fiduciary. In partnership you read fiduciary relationship. Fiduciary means, can you tell what is this? Act of trust and confidence. Best example for a fiduciary relationship is mom and son. Suppose if mom is feeding son, do you think son will ask a question, mom, whether you mixed poison in this food? Whether son will ask, whether son will test, son will eat whatever, because he is having a trust on his mother. The same kind of trust you will find in the partnership. The same kind of trust you can see in here also, now in this example also. Suppose, listen to me carefully, there is a company called H Limited only and S Limited, two companies are there. Listen carefully, or I'll take some realistic examples. Initially, H, A, okay, fine, but when we go in detail, it's not possible. Suppose Airtel Limited company is there, Indus Towers company is there. Indus Towers, both are listed companies only. Airtel Limited, it is holding a 49% of paid up equity share capital in Indus Towers Limited. And Airtel Limited is having one managing director. For example, his name is Mr. Manoj, managing director of Airtel Limited. Out of his savings, he bought 2% paid up equity share capital of Indus Towers. With this, you can't come to a conclusion, sir, Airtel is a holding, Indus is a subsidiary. Why? What definition we read? Either directly or indirectly through its subsidiaries. MD is not a subsidiary to Airtel, he is an employee. Now what happened is, one day managing director Manoj got a 2 times heart attack immediately, and he know that he will get third heart attack immediately. That's why he called his lawyer and he made one will. Actually, as per will, he is having a son of a 16 years old person. He is a minor. So now Manoj appointed Airtel as a legal guardian to take care of his son. As a matter, all the assets of managing director Manoj got transmitted to Airtel. 49% plus 2%. Now total Airtel is having how much? 51%. Now can I call Indus Towers is a subsidiary to Airtel? No. Why no? This 2% it is not holding for itself. This 2% it is holding for son of managing director. So that means any paid up share capital percentage held as a guardian, as a trustee, included or excluded for the purpose of checking holding subsidiary relationship? Excluded. That means net how much? 49. With 49 there is no holding subsidiary. Are you all getting my point, students? Everyone. And by virtue of this definition, it is very clear, a company can have more than one subsidiary, a company can also have more than one holding company. Possible or not possible? Obviously possible. Suppose in Hero Honda Limited company, Hero is holding 99% share capital. Hero Limited is holding 99% share capital. So obviously Hero Limited is a holding, Hero Honda is a subsidiary. But in Hero Honda, majority of directors are in the control of Honda company. Now here Honda is a holding, Hero Honda is a subsidiary. In this way, that means by way of paid up share capital, one can become holding. By way of control, another person can become holding. Another company can become holding. Control means what control? Control over composition of directors. Are you all getting my point? But at the end of the day, consolidated financial statements applicable only to these companies, not to this company. That means who is holding more than 50% of the paid up equity share capital, only those companies will prepare consolidated financial statements. All of you getting my point? Can I proceed? So in this concept, this point can be tested. C point can be tested. Next, associate company. Very simple. Associate company is not a subsidiary, but in this company we are having a influence, not normal influence. We are having a significant influence. And what is the formula for significant influence? 20% of the voting power. See, for the time being I use voting power, or I will use a paid up equity share capital. For the time being both are same. But once section 43 comes into the picture, equity shares with the differential rates, once that concept comes into the picture, then voting power, paid up equity share capital, both are not same, both are different. For example, S Limited, one company is there. Here 1 lakh equity shares are there. How many? 1 lakh equity shares. In this 1 lakh equity shares, imagine 40,000 shares are held by B Limited, 60,000 shares are held by A Limited. Forget about minimum number of members. Our public company 7 members needed, but you are telling only 2 members. Forget about that concept. Listen to me. Out of 1 lakh shares, 40,000 shares are with B Limited, 60,000 shares are with A Limited. So in a general meeting, A Limited will get 60,000 votes, B Limited will get 40,000 votes. So definitely A Limited is a holding company. A Limited can control S Limited. So here all shares are normal shares, so there is no distinction. Imagine company added some 10,000 differential rights. What is the concept of differential rights? Differential rights means what? In differential rights, person will not get same voting rights, or person will not get same dividend rights, either high voting or high dividend. Suppose these 10,000 differential rights, each share will give 100 votes, imagine. And all these 10,000 shares are allotted to B Limited. Now if you count number of shares, A Limited is having 60,000, B Limited is having how many? 50,000. That means in terms of number of shares, A Limited is a dominant party, B Limited is a weaker party. But when general meeting gets started, if you count votes, A Limited can cast how many votes? 60,000 votes only. But B Limited, 10,000 differential rights into 100 votes means 10 lakh votes. And 40,000 shares normal rights into 1, that means 40k. 10.4 lakh votes are lying with whom? B Limited. In front of B Limited voting power, A Limited is nothing in fact. But still calling A Limited as a holding company, it's a nonsense. That's the reason previously word paid up equity share capital word is there. In that place we got what? We got voting power. So for the time being, if company is having only ordinary shares, normal rights, either voting power or equity share capital, both are same. But if company is having differential rights, difference will come. Getting it? Everyone? Hello? Fine. So in associate company, yes, where a company has significant influence but it is not a subsidiary, includes joint ventures. Next one, significant influence, at least 20% control of total voting power. They use the word at least 20% control. So that's why, readers will get a doubt. The doubt is, sir, at least 20% means greater than or equal to 20. Suppose if it is 60, then also will it become associate or sir? No. Subsidiary is different, associate is different. That's why they restricted definition to up to 50%. How? They wrote clearly, not a subsidiary. That means any control that is between 20 and 50, associate company. Everyone? So voting power, total number of votes that can be cast in a poll if all eligible members are present and vote. We are having 4 types of voting, right? Show of hands, poll, postal ballot, electronic voting. In detail I'll discuss with you in management and administration chapter. So in case of poll, total number of votes cast is nothing but voting power. Okay. Same point here also you can see, shares held in fiduciary capacity, considered or not considered? Not considered. Joint venture, a joint arrangement where parties with joint control have rights to the net assets of the arrangement. It's nothing but alliance only. Suppose majority of the members of the house can form a government. If no party is having majority, then what people will do? 2 or 3 parties will come together, they form an alliance and they will start ruling the state. Yes or no? In Maharashtra, the same thing is happening between BJP and I forgot the names. Ignore. Recently, I think before one term in Karnataka also, Congress plus JDS, I think Kumaraswamy sir is a chief minister of Karnataka, right? Previously, you don't know? No problem. No, question will not come in the exam. But for understanding, I am telling you why parties will come together, because to form a government. So here also, if one company is not having proper resources, 2 or more companies are having proper resources, they will come together and they will form one venture. That is nothing but joint venture. Suppose government requires high manpower, high net worth, high experience. Suppose I am having experience but I am not having manpower, or I am having manpower but I am not having a capital. So like that, some 3 companies are there. Now these 3 companies they can form a joint venture company. That joint venture company will satisfy all the 3 conditions and that will get a contract from government. Understood? Everyone? So tell me, all these concepts, so far whatever concepts I discussed with you, are the real concepts or illusionary concepts? Real concepts only. Next one, foreign company, government company, companies based on liability. With that chapter will be over. I'll give you break. Okay. Foreign company, government company. Tell me, what is a foreign company? If a company is incorporated outside India, it's a foreign company. No. If a company is incorporated by foreigners, no. See, for us nationality is there. How nationality was, how nationality is determined in our cases, either by birth or by citizenship, nationality gets confirmed. But for companies, no, nationality depends on place of incorporation. If a company is incorporated in India, company, it's a company, it's not Indian company. Indian company, there is no term called Indian company in Companies Act. It's just a company. For our understanding, we can call them as domestic companies. If a company is incorporated outside India, all those companies are body corporates. We call them as company incorporated outside India. But if such a company comes to India and set up a business in India, we call them as foreign company. Understood? So even 100% of equity share capital was held by foreign nationals, it is immaterial. Where it was incorporated? Sir, it was incorporated in India, Indian company. Understood? Suppose you take Kia cars, at least you know Kia, right? Kia company. Kia company, South Korean company, came to India, established one company in India. Now in India, the company which was incorporated, it is a company. But this company is manufacturing cars on behalf of a parent company which is in South Korea. Now that parent company becomes a foreign company. Similarly, you take Microsoft. In India, it is a company, but the parent company becomes foreign company. So simply, if I come to India, if I start company in India, started company in India is a domestic company and parent company is a foreign company. Without incorporation of a company, why these many number of companies? I will set up just a branch. Then also I will become a foreign company. Suppose if you take Alibaba website, you know, Jack Ma company. It didn't set up any physical, it didn't set up any branches in India. It is doing business online. Imagine. Now Alibaba is also a foreign company. Imagine Facebook also not registered its company in India. Facebook operations, yes, everywhere in India happening. In India, you know, Facebook is very popular. Instagram is popular. So we are chatting with our friends. We are also advertising our products. We are also advertising our services. Now all these Instagram, WhatsApp, everything becomes foreign companies. All these are foreign company products. But if they register in India, that company is a company, parent company becomes a foreign company. Getting my point? Everyone, incorporated in India, company. No incorporation, sir. Direct to business, sir. Foreign company. Incorporation with the help, with the support of Indian company, they are doing business, sir. Now parent company becomes a foreign company. On this separate chapter is there. I'll discuss this point there. Next one, government company. Have you heard about PSU? What is PSU? Public sector undertaking. Okay. PSUs, nothing but government companies. So who is having control in government company? Government. How much of the control? At least 51%. In subsidiary company, greater than 50 word used. In government company, greater than or equal to 51%. There 50, here 51. Is there any logic? Is there any logic? You fix it, I'll tell. Logic, yes or no? Answer is no logic. This was written by one person, this was written by another person, that's it. Understand? See, law is not something written by one person. It is codified, it was written by n number of experts. For one expert, 50 is he thought 50 is a good number, so more than 50 he used it for holding and subsidiary. And whereas here, 51 government company like that. Real logic, why 50? Ordinary resolution. Do you remember ordinary resolution? Votes in favor greater than votes against, ordinary resolution is said to be passed. If I'm having that much voting power, how much voting power? Majority voting power, I'll be holding company, you will be subsidiary. So for holding subsidiary 50%, there is a logic. But government company 51%, there is no logic. Just, a person while drafting government company definition, he used 51%, that's it. No logic at all. Now, at least 51% of paid up share capital is held by either CG or one or more state governments, or partly by central government and partly by one or more state governments, then it becomes a government company. Now, my question, why government invests money in the companies? Why government will do business operations? Simple logic. If there is no concept of PSU, private enterprises will play games. 100% they will play games. In Instagram, in YouTube shorts, this kind of reels are very popular. Some 3 suppliers will supply goods. One person with holding 40 rupees, another person with 50, another person with 60. Looking at this person, this fellow will make 30. This fellow will make 20. And now what this person will do? He will buy all the things at 20, all the things at 30. By this, what happens? Suppliers count will come to 1. Once he become monopoly, he will fix a price of 400 rupees. Have you watched this kind of shots? At least. Sure? Assumption or true? True, okay, fine. Now, similarly, You observe Jio, you observe, Vodafone Idea, you observe Airtel, and similarly you observe BSNL. Imagine BSNL, if PSU is not there, what happens? These individuals, they try to incorporate monopolies by purchasing small companies. I didn't remember in which year Aircel came, but Aircel, one SIM card is there, Aircel. At least if you know CSK, CSK on CSK jersey, some editions they played with Aircel. Later it was acquired by one company. Uninar, another company is there, acquired by another telecom operator. Previously we had Vodafone telecom operator, Idea telecom operator. Because of Jio, what happened? They got merged into one company, Vodafone Idea. Understood? So slowly they will monopolize and they will start dictating the terms to the public. Ultimately, who is getting affected? Public is getting affected. Because of PSU, what happens? Something central government can control this kind of businesses. And you will find PSUs in all essential products only. Like telecom, you can see. Oil also, Indian Oil Corporation, Bharat Petroleum, Hindustan Petroleum, gas companies also. All these are PSUs. Are you getting my point? So in all basic necessaries areas, you'll find one PSU to regulate that sector. Okay, fine. Now my another question. All public sector undertakings are public companies, private sector undertakings are private companies. Agree or disagree? Listen carefully. All public sector undertakings are public companies. All private sector undertakings are private companies. True or false? False. Why false? Public sector, private sector are decided by government ownership. Understood? Public limited company, private limited company decided by AOA. Reliance Industry Limited, where majority of capital is held by Mukesh Ambani sir, it's a private sector undertaking, but it's a public limited company. If time is bad, like this also question will come. All PSUs are public companies, all private sector undertakings are private companies. False. Getting my point? Everyone. Next. Now my doubt is, central government holding, suppose if you take Indian Oil Corporation or if you take Power Finance Corporation, central government is holding 52% of paid up share capital in PFC as well as IOC. Central government holding shares means shares are held by Modi ji or shares are held by Amit Shah ji. Then who is holding shares? Government is not a body corporate. Every 5 years elections come, before elections government gets dissolved. So government is not a body corporate. Body corporate should have a separate legal entity character and perpetual succession character. But whereas government every 5 years, death, rebirth. So government is not a body corporate. Government is not a natural person. Then shares are held by whom? You, me, ANM sir, Harsha sir. Then tell me who is holding shares in a government company? In the name of, exactly. If you take central government, shares are held in the name of President of India. And again, President of India means not the person, it's a designation. Suppose suddenly, imagine, tomorrow government decided to change president. They want me to take that position, imagine. That means automatically I am the member of all government companies. Understood? Suppose after becoming president, imagine. After becoming president, I decided to go to Singapore for haircut, imagine. I want money. Can I sell shares of IOC? Fancy rate, IOC for sale, can I sell? No. For that, finance bill, money bill, cabinet need to introduce that bill in both the houses of the parliament. Once bill gets approved, then only shares selling will start, and it's officially called privatization. Heard about it? Privatization. Clear? Everyone. So President of India, in case of state government, governor. Are you all getting my point? And if you look at the definition of government company, one more definition is there. Government company includes subsidiary company of a government company. That means every subsidiary to a government company is also a government company. Everyone. Past some 4 years back this question came. Now answer carefully. Suppose central government is holding 56% of paid up share capital in IOC. Now whether IOCL is a government company or not a government company? Answer me. Yes, it's a government company. Correct. IOCL is holding 60% of paid up share capital in C Limited. Now tell me whether C Limited is a government company or not a government company. Yes, obviously government company. Why? Sir, you told only CG, SG, both CG and SG. No, I told another part of the definition. Another part of definition is a company which is subsidiary to a government company. A company which is a subsidiary to government company is also a government company. Yes or no? Now, C Limited is a subsidiary to IOCL, so it becomes government company. Now you understood, right? Now let me ask you the question which came in the examination. Some 4 years back this question came. The question is, central government is holding 60% of paid up share capital in IOCL. IOCL is holding 40% of paid up share capital in A Limited. And central government is holding some 20% of paid up share capital in A Limited. Let me repeat the question. Central government is holding 60% of capital in IOC, 20% in A Limited. IOC is holding 40% capital in A Limited. Now, as per the definition, whether A Limited is a subsidiary company or a holding company. I'm sorry. Whether A Limited is a government company or not a government company. Government or not a government? Come on, answer me. So the answer is, come on, tell me, answer is not a government company. Why? Array, look at the definition. At least 51% held by CG, SG, CG and SG. There is no term called government company in the definition. This is one part of definition. And what is the second part of the definition? Subsidiary to a government company is a government company. Sir, 40 plus 20 can I add? Array, central government is not a body corporate first of all. If central government is a body corporate, then you can say that subsidiary along with subsidiary together crossing more than 50%, then it is a subsidiary, like that you can call. But first of all, central government is not a body corporate, right? So one point of definition, it is talking about CG, SG, CG and SG. Another part of definition, it is talking about a government company subsidiary. It is not satisfying these two conditions. So this is not a government company. Understood? Come on. Loss of energy. Next one, differential voting rights. Already told you, in case of differential voting rights only, paid up share capital, voting power, differences will come. If there is no differential shares, paid up share capital is equal to voting power. That means if I hold 10 shares, I'll get 10 votes. 10 shares of 100 means 10%. 10 votes of 100 means 10% only. Next one, exceptions. Government companies are not required to use word private limited. They are not required to use word limited. Understood? So name ends with limited, provided they have not defaulted in filing financial statements and annual returns. Next one, companies based on liability. Classification of companies based on liability. On the basis of liability, companies are classified into 3 types: limited by shares, guarantee, unlimited. First of all, tell me whether company have limited liability or unlimited liability. Company will always have unlimited liability. Let me repeat, companies will always have unlimited liability. Then, sir, with respect to which person we are talking about here, liability, sir? Liability is talking, we are talking liability perspectives from members. Suppose members liability is like this. Every member gave guarantee for 20,000 rupees. Every member is giving guarantee for 20,000 rupees. That is nothing but company limited by guarantee. No, sir. Every person is liable for 2 rupees per share, sir. Suppose A is holding 1,000 shares, sir. 2 into 1,000, A liability is 2,000. B is holding 2,000 shares, sir. 2 into 2,000, that means 4,000 rupees. So here the liability is limited to the extent of unpaid value. And that kind of company is known as company limited by shares. Sir, there is no limit on members liability, sir. No limit on members liability. Then what is that type of company? Unlimited company. Every company is having advantages, disadvantages. Suppose my company is not for business. My company is for doing charitable activities. Now if I come to you, come on, you invest 1 lakh rupee, you will get 1 lakh rupees worth kindness. 1 lakh rupee worth, 1 lakh rupees worth sins will be abolished. Can I tell like this? Even if I tell like this, will you invest 1 lakh rupee in my company? No. If you are interested, you will make donations. Such a companies doesn't require share capital. Simply Section 8 companies will form like company limited by guarantee. Business companies will come and form as a company limited by shares. And those who had 100% confidence that we never go into liquidation, even if we go into liquidation, our assets will be in a position to meet our liabilities. Those kind of people will form unlimited company. Understood? Being an unlimited company, they are exempted from filing few forms with ROCMA. That's what I told you. Both, they had common advantage. They had a variety of advantages and disadvantages. Everyone getting my point? Hello? Everyone. And tell me, in company, liability is limited, right? Company limited by shares, liability is limited. Is there any concept called joint and several liability in company? Joint and several liability. Yes or no? Answer is no. No. Yes means, first of all, joint and several liability means what? Suppose I am holding 1000 shares, you are holding 2000 shares. Now, company need money. If you are not paying that money, do you think company will ask me to contribute that money? No. Do you think official liquidator ask me to pay that money? No. That means every person will have their individual liability, and their liability is restricted to unpaid value multiplied by number of shares held by that person. If you hold one share liability. If I hold 1000 shares liability. Understood? So in this way, first chapter, some material definitions concept we completed. So let's have a break. In next class, I'll start incorporation company.